want you to hear soft chocolate good lips that are singing. Get away, get above these problems. Portraits of Leo. But look at me, check the work, shake the job, I'm in the shop. You gotta get away to where the boat these problems, get away. Where the boat these from takes away. But look at big problems. The work is the job, I'm in the blue shop. But you gotta get away to where the so get away. Where the boat these from takes away. But look at big problems. The work is the job, I'm in the blue shop. But you gotta get away to where the boat these from. You gotta get away.
Good morning, everybody. We'll get started here in just a few minutes.
She's got a plan. What we find to make out. I've got a strong mind. She's going to be fine. It's all really want to I mean, the first stop to get out here. That's what they say. They say on the pain I say. Sure, baby, talk to the United States. Wow, they're not saying I'm going to wait to see Chevrolet. Well, so I know them get up the people to play all them
Good morning, everybody. Now we'll get started here in about 4 minutes. All right, I think we're close enough. What do you guys think? Ready to get started? Good Friday. Happy Friday. All right. I'm going to leave the video off for right now, just so things don't get sticky as far as the live stream. Okay, as we get started off here, we did have the CPI report. Remember, that was December numbers. Okay. There's a lot of smoke and mirror stuff going on as far as the numbers. Bureau of Labor and Statistics is really messed up, and so is with the government shutdown. Many of the economic numbers are just being exploited kind of the wrong way. They're using 2 to 3 month old data to, I'm referring to Congress and Senate. The Senate Banking Committee had meetings last week with Scott Bessent, and they just were throwing absurd numbers out that were not even related to what was the current conditions were. Okay. And they're just trying to hold off saying, things are not changing, but things are changing quite a bit. Economy, growth, jobs, everything is getting pretty good. Okay, but it's failure to report those, and a lot of it has to do with, misinformation being put out there. Another notable thing, Florida just made gold and silver legal tender. Okay, now that's joining 12 other states. So we have about 25% of the United States now using or approved to use to pay bills, to pay taxes, anything that you may owe the government, you can pay them in gold or silver, okay, as legal tender. Other states are looking to come on board with that too. Now that's changing our monetary system quite dramatically, okay? For the last two sessions, the indexes have been in manipulation phase. I do want to point that out because today we are looking at being part of that distribution phase. Okay. And some of the maps, some of the things that we have covered in our live trading rooms and our community trading rooms have really just kind of shown us a very accurate map. Okay. Now these maps where you have accumulation, manipulation, distribution are part of what Richard Wyckoff teaches. He has some different words for it. In fact, the distribution is also referred to as a spring reversal. Okay. Now that spring reversal, either to the downside or to the upside. And the important part about the map is every time you pick up a map, you got to kind of get focused, right? What's north? What's south? What's east? What's west? And that's what the accumulation area does for us. The accumulation area kind of gives us the start, and that's that sideways choppy market. Now, manipulation is, prices being pushed up, so banks and institutions get out, or price pushed down. They're basically manipulating the price in order to trigger traders out of their positions or into positions that they may uh, not want. Okay, so if they're pushing price up, they're selling to all the willing buyers, novice buyers. If they're pushing price down, they're buying from all the novice sellers that are panicking out. That leads to the distribution phase, and that's what we're in. We're really, well, we're in right now. We're right at the start of this. This also happened last week. Okay, very similar price pattern. And we got to go back to this was last week, but the bottom was put in on Thursday night when the futures opened, and we had this type of move, and this is what I'm expecting. Not just straight up, but a little bumpy as we start to go off, but a continued move up for the session. Okay. So when we're in the distribution, what happens a lot of the time is we have some chart patterns that are very familiar to a lot of us technical traders, which is the Elliott wave pattern. Okay. Now with Elliott wave, you get basically three pushes to the upside after a reversal. So we're kind of looking for that reversal area now. Today is an outside day. That is correct. Okay. And as we come back to the larger time frame, price has broken below the prior session's low. Okay. And that has happened on each one of the equity indexes. Okay. So that is also a good sign. On the daily chart, the QQQs came down to the 88.6% retracement and now are looking to they traded slightly below it. And that's what I have these lines on the daily charts of what we're looking for. But we also have on the NQ that 70.7. Okay, for those that have talked that understand, some of the harmonic patterns that Scott Carney teaches, harmonictrader.com. That 70.7 is a very special place where we look at the structure, and the structure is important, where you have drop to base greater than this base to rally. And if you get that 70.7, generally that leads to a much bigger trend. Okay, so for those that like Fibonacci measurements, I do utilize a lot of that in my trading. It helps locate and confirm information. Okay, so we'll keep a close eye on that. We want that 70.7 is generally a very, very high probability Fibonacci number for the beginning of a longer term trend. And that's what we're working on right now. I do want to point out that last week, and when we had that move up, and it started on Thursday, and Friday was the bigger. Oops, I've got to go back over here, a smaller time frame. Is notice the start of it. Okay, very important to notice the start. And this was a fantastic picture because gold had very similar picture last night. Okay. Notice how price moved up and then you had to utilize the fair value gap as a tradable entry. Okay. Using the fair value gap. Okay. So where we're at right now, okay, on these equity indexes is we're still right at the start. Okay. And the NASDAQ has already used the fair value gap and has one a little bit lower, which we'll get to in just a moment. Okay. Let me just reiterate on gold. Last night, she noticed the picture, price shot up, retraced to the fair value gap, and we had a very, very nice move. Okay. Yeah, due to a public holiday on Monday, we will not have a live trading room, President's Day, but I will be in the Discord room where we can, just kick back and trade as we will in there. Okay, so for those who like to join me on Monday, it'll be early session because the banks will be closed. Okay, so it's just going to be the futures trading. We'll just see what's going on and we'll see if we hang out for a long time or we just go back and sleep in a little bit more. Okay. All right, crude oil. Also, finishing off on a large time frame, that accumulation area, I am looking for crude oil to get back below this support. Got a target range about 61.75, 61.10. Had an earlier trade on this, but got stopped out. Just had my stop a little too tight on that. Okay. Heating oil, reminder, heating oil is a lead indication. And remember, we just talked about the accumulation, manipulation, and distribution. Okay. So when you look at this map right now on crude oil, what phase are we in? Okay. So if we're in that manipulation phase, there are certain entry techniques. Oh, that's a bummer. There are certain entry that we use, and having two different types of entries, like a fair value gap and or the ABC pattern. Okay, not the ABC, the leg base, sorry. Okay, so as we start watching crude oil start making its way back down during the manipulation, and it is manipulation, so they're pushing price down, And generally the breakout area, just referring back to the picture, the map, you'll notice that I see after price breaks out of um, the accumulation area, it looks for the first turn to be at the leg base zone. That's down here about 60, 68. Okay. So as the manipulation phase starts out, we can start to watch for and plan for entries utilizing the fair value gap technique. And for those on a larger time frame, you might have using the candle range theory, and some of those techniques will also be something you can utilize. All right, let's get back to S&P and the NASDAQ because they're coming back down too. And what we want to watch for, so you'd already tested the fair value gap on the NASDAQ. So we're looking to utilize this as a tradable entry, 68.36, 68.32. Okay. Now, on the way back up, we are looking for price to travel, and it may take till Sunday night to get back above this accumulation area. Okay. And that's why we utilize that accumulation area, because it gives us a profit target. We have a nice pocket of points in between, so price should move easily through that. Okay. And I want to get back over to the NQ. I want to get that one. That one, we got a nice move off of it. But now it looks like we need to wait for price to come down a little bit further. When utilizing a fair value gap trade entry, you got 3-candle pattern, and candle number 1 should be where you have your stop loss. The lower, you can use the close or you can use the tail of that. Okay. So looking for a tradable entry around 24,862, 863. Okay. And I'm going to put that trade on there right now, 24,683. Okay. And the stop loss will be low. Now, everybody must utilize what their risk management is. Okay. Depending on how many contracts you can trade is based off of your risk or your trade plan risk. Okay. What is your trade plan risk? How much are you willing to risk on any trading idea? Okay. Have that number in mind and make sure you properly size your position so you're not risking dollar amount more than what you have allotted per your trading plan. Okay. We can see with the large market cap stocks right now that they're kind of mixed. Meta continuing to move a little bit lower. Okay. So be patient, wait for this trade entry. It's well worth the wait. Taking a look at the indexes together on a 5-minute chart, we can see that, or 10-minute, excuse me, we can see that we're also in that accumulation phase. Okay. Now, in the accumulation phase, we also want to compare trade sessions. So over here we have a New York session, the end of the New York session, the Asian, and now we're in the London. Yeah, basically the Asian session is closed. And we're on the crossover with the London, New York session. Okay. Now, each one of the down moves or the big price moves tend to happen during that overlap between the London and New York session. Once the London session closes, generally we get a little relief. Okay. And that's what we've seen occasionally well, not occasionally, quite often, when we see the London market close, which is about 12 p.m. Eastern, okay, we see that the markets kind of take a breath. Okay, so if the markets are going straight up, we look for the London session to close, and then we look for a pullback. Going straight down, just the inverse. Okay. All right. So as we start off, and this is why I haven't made a lot of trades, I'm kind of waiting for a few, is that notice where we're on a map. This is pretty difficult to trade unless you buy the low, sell the high, but there's just too much volatility around buying the low, selling the high. It's because you got all those breakout traders. Okay. Nothing wrong with breakout traders. It's just, they tend to be a little flighty. And when they run the stops, they're looking for that what they call a liquidity sweep. Okay. They're looking for liquidity. All right. Yeah, I'll be in our Discord room. I'll be in probably around well, once I start putting my day together. It'll be about as far as East Coast time. Oh, it's going to be about 7:30, 8 o'clock Eastern, which will be on Pacific time would be about 5:30, 6 o'clock. So right now. Okay. Good morning. So how are you? All right. So as we are putting things together, let's take a look at some of the things outside the market or outside the price. Look at that. Pre-market trend is at above 2. Hmm. So what's going on behind the scenes? Trend is high, time to buy. So if the markets start dropping, we'll be looking at now. I want to come out and look at the QMI. The QMI gap down this morning. Wow, big gap down. Okay, so more down ticks, down volume on the NASDAQ 100. If the NASDAQ is dropping and the trend is high, they're starting to buy. Okay. Volatility index in the pre-market is up, uh, showing a little more fear. We also see that the 10 and the 2-year yield reacted off the CPI numbers, and the dollar is trying to stabilize around these levels. Okay. Now the dollar really impacts the other futures for Forex futures market based on what how it moves as well. Okay. So the trend being high above 2 is rare. Okay. Let's bring up our internals here. And trend high, markets dropping is we're looking for price to come into demand. That's going to make the NQ entry that we're looking for and the S&P entry that we're looking for. It's still going to be some risk on the trade, but we're looking for price to drop just a little bit more to give us that tradable entry, or we're going to have to wait for another one. Okay. The important part of what we're doing right now is understanding what phase we're in. And we're in a reversal phase, right? So reversals are not clean. There's a lot of ups and downs. Okay. But once that trend starts, it can be pretty rewarding. And if you know where you are on the map, okay, you can look to start off with a very small position and possibly only use about half of what you use about half of what you would put towards risk on any trade. So, example, if you allow yourself to have $300 risk per trade idea, start off with $150 risk. There's a lot of profit potential as price gets back above the accumulation. Okay, there's a lot of ways to add on to positions as well once everything starts to move. Okay, so our lowest risk entry is going to be at or near where we anticipate that turning point. And because we understand that manipulation phase and what we're potentially starting off the distribution, there's a lot of upside. Now, with the current CPI numbers coming out, you can expect um, the president to come out and tout. So, pretty predictable. Okay, if they had some good numbers or some good information, It's going to be talked about as saying, hey, we should have dropped the interest rates, more, all that scuttlebutt going on. Okay. So be prepared for those type of news bursts. The only thing we have left on deck is um, I think the Baker Hughes number. The other numbers that are out there, yeah, that's pretty much it. Okay. Now, CPI numbers, especially even though they're delayed, okay, may change the narrative around inflation. So you're going to listen and watch. And if you want to go out and look at core CPI and break down the numbers and things like that, I'm not the one to do that for you, but you'll see that if you go out and read about it, that that may change the narrative around inflation. Okay. Let's see, CPI will put light on how the Fed and the government are dealing with inflation. Okay. But remember, these are December's numbers. Okay. And we saw a reaction earlier this week when we had non-farm payroll come out, and people thought it was the reaction was straight up. Okay. And we caught that move down. If you hadn't had a chance to look at our video, that was a really good trade. Okay. It was a really good one. Uh, That was in our live trading room earlier this week. All right. So we're kind of on that waiting mode. We have orders parked down below. We're going to wait for the market to open about 9 more minutes. Uh, with any luck, we'll get price to pull back into our zone, and we'll look for that potential turn. Okay. Now, if you start off with multiple contracts, okay, be prepared to leave one on. Okay. Once you get your profit margin, cover your risk on the trade, or um, be ready to let one run. I mean, in this distribution phase, okay, the potential profit target is above accumulation areas. Okay. Now, there's going to be some bumps and fair value gaps and things like that. It doesn't go straight up. Okay. All right. Let's get out on gold. Yeah, this is kind of what I expect. Once we get that pullback, the initial start at the beginning of the distribution, we get a nice move. That's where a lot of traders make some money. Then the price pulls back again, and we start getting the bigger swings in price. Okay. So part of what I expect today is a move once we get our pullback, and we're going to have a nice upside move. Now, here on gold, profit target for this is back above the accumulation area. If you notice, the breakout of the accumulation down also aligns with the leg base zone. Very important. Okay, very important. Because a lot of people take the breakout, but they often get stopped out only to miss the bigger move because they don't understand that that little push down, if it didn't align with the leg base on the left-hand side, there's potentially another place you can get in to follow it down. Okay. All right. Natural gas. Yeah, this one's going to be a little tough to navigate today. Crude oil. Still looking for that move lower. Yeah. I'd also like to make everybody aware that what's the date on that? February 26 and 27, we are doing a pre-market routine class. And everything that you see me put into how I assess the market, pre-market tips, use the news, use the prep screen zones, use the economic reports, and all the little details. We're going to show you exactly what we look for and what to start training your eyes to measure. As I've gone through this, um, this morning, we checked to see if we were inside day or outside day on the equity indexes, right? We noticed the Globex range, compared the Globex range to the daily ATR, and when it's about 50%, things are a little choppy at the open. We use the pre-market volume on the Dow 30 stocks to see if there's a large amount of volume, if there's a little bit, okay, especially around economic reports. We want to know if we're at outside day where prices broke outside the prior session's range. Okay. Why are all those things so important? Those are things that you observe and see every single day. Okay. But if you focus on them, you start saying, well, wow, if we're an outside day, that changes the trading environment a little bit compared to an inside day. The inside days often start off real choppy, and if we have news or economic events coming out and the volume is light, we often get some big whipsaw. Now, some people like to cross the street when the crosswalk says don't walk because of the information they gather. Okay. Now, we need to know whether we like to engage in that market condition. Okay. Yeah, the link to the is to that is in our in the chat on YouTube. So they pinned it in there for that to come out. But anyways, we go into great detail on each part of that, and it will accelerate your learning curve by years when you start watching that. Okay. All right. So we're about 4 minutes away from the market open. Apple's up 60 cents, Broadcom down 50, Nvidia up 50, Meta. Yeah, things are really just kind of wait and see as well. Okay. So pay attention to the headlines. And one of the things that's really kind of amazing here is this website called Financial Juice. Okay. We're not affiliated with them. So, but you can select what news sources you want to watch. And the ones with the blue dots are just basically random time frame numbers that come out. Somebody says something. Okay. But then you have Market Watch, FX Street, CNBC, and many more. Notice that they all come out on the top or bottom or quarter of the hour. Okay. So we often see that the markets react, sharp drop in price or rally in price based off of when breaking news, or what they call breaking news. Okay. And they only report it on the quarter hour. Okay. Where the other news events, they come out in random times. Okay. Now, this is very similar to a Bloomberg terminal. And if you've never worked with a Bloomberg terminal, you're missing out. Okay. There are a lot of very cool things about getting news before everybody else does. We're 2 minutes away from the market open. This is the market open order imbalance. Okay, so we're seeing on the S&P, there's a larger sell imbalance. NASDAQ, there's a larger sell imbalance. Dow, there's a larger sell imbalance. And of course, the Mag 8, we use 8, is showing a larger sell imbalance. Now look at the numbers. Okay, it's a 4-to-1. Sell imbalance over buy imbalance. The market open order imbalances. And why do we look at stocks like this? Well, because we're trading the equity indexes. Stocks move first, exchange traded funds move second, and then the futures move. Okay, so that's why we watch all of that. But it's really quite interesting to see the fluctuation. But look at the numbers in the difference of sell orders versus buy orders that are approaching the market open. Some really good information. Market open order imbalance is different than the market on close and has a slight different parameters. Good information. Okay. some good resources, and that's part of our pre-market routine is talking about what resources can we use and how do we use those. Okay. Okay, let's wait for it. We already have an order parked. Okay. Stop loss is going to be a little bit lower. And just letting the market show us what it wants to do. And that first we watch the stocks. Then we have an idea what our exchange traded fund is doing. QQQs.
Order filled.
Just missed us by that much. I'm noticing that my data is just slightly delayed, so. One second, I'm going to stop sharing for just a moment, just so my data can get caught up. I'll be live. We'll start sharing in just a moment as soon as my charts unfreeze there. Okay, things are coming up here now. Wow, missed that entry. Here's our cues. We're going to look for a little follow through on the cues. Just now getting a little bounce. Remember earlier we talked about what phase we are in, okay? And what to look for on those. Come on, church, load up. Always seems to do this when we start getting some really good trade-in activity. Let me see if I can free that up just again. Yeah. Was anybody able to get into that trade? I know I had my entry just a little bit lower there. S&P still waiting for that one.
Order filled.
Yep, stocks are just still wondering if they're gonna. Ooh, but remember what phase we're in, okay? Yep, crude's still making its way down.
Order filled.
We did get the NQ. Got a great entry. Just waiting for the stocks to make the turn now. Need some help from NVIDIA.
Order filled.
Remember where to place your stop. It's make sure you don't risk more than your accounts, what your trade plan is. We still need some help from the Qs. The Qs are approaching the gap fill. Stop out there. Yeah, just keep a close eye on the stocks over here. Once the stocks start to turn, we'll see the index move. Okay. Well, I'm sorry for my charts being delayed. It's just really tough on the computer here with all the things we got going. Let's go back out to a larger time frame. Approaching a prep screen zone, 68.12. And we have the 88.6% retracement on the S&P, about 67.81. So that's going to be on the lower part of it. Watch for the quarter hour news, as we described earlier, coming out. Come out to a larger time frame. You just watch this area. We're in prep screen zone area, so we're still right at the 70.7. We haven't gotten below it yet. We do need some help from the tick and the tick Q. Yes, arrived early. Okay. Wow, that was a nice liquidity sweep, wasn't it? I'm still waiting for my charts to catch up here. Well, come on, charts. just stop sharing for just a moment, see if we can get things to catch up again. Anybody get in? Take any of the trades? That was a beautiful bounce. Something that found the buyers, didn't it? I'm really not sure what's going on with my computer here. Hey team, I'm gonna log out at Zoom for just a quick second, so I'm gonna make you the host. Just hold on, it'll take me just 10 seconds to get out and kind of free up so I'll be right back. Okay, are we back in? Back up? Are you seeing my screens at all? Hello? How about now? Things up there? It's just frustrating. The computer's doing what it's doing at the moment. Well, for everybody's in the live stream, I'm sorry for the volatility that we're having here. I'm just trying to get the charts up here. Very nice move off of the prep screen zone. I mean, that was huge. A good short-term trade for sure. I'm still trying to decide. And remember where we are on the larger time frame. The daily chart, right off that 70.7. This should be a pretty steady climb back up. Daily chart on the QQQs, we have filled the gap. Just got to find a way to get into it now. Okay. Now look at that big whipsaw on a 5-minute chart. That is crazy. Okay, so let's let the market settle out. Kind of got a good idea where we're at, but the volume needs to come in from the stocks. Yeah, the S&P was just nutso. Come on. I want that big move. It came right down to, yeah, you're right, Silk. Went right to the leg base, right down there. So I'm just going to make an adjustment. We're still in that area where we could potentially turn and start climbing back up, but now we have to get another entry. Okay. Oh, let's see. And Q, the tick charge.
Order filled. They just don't make it a smooth one, do they? Just need to see if the buyers are going to take hold. Yeah, sometimes I'll alter between a tick chart and a time-based chart just to see if the volume's coming in or the number of trades. The Russell's starting to skyrocket, so is the Dow. Just need the NQ to jump on board. And we got a couple of levels here where stops might be run as far as breakout traders stepping in, and another one right above here. You can also see in the S&P where prices made a higher low and approaching the resistance area. Let's see if we can get that breakout. And we see the Russell is already on its way, and the Dow is also coming to catch up here. Come on, get up there. They're just sweeping stops left and right, aren't they? What you're watching is there's an accumulation being built here for where we're having more buy orders coming in and the sell orders are still pushing price down. Okay, that's really all the support and resistance is all about there. See you in the battle. Yeah, the time-based charts are so messy. I mean, how are you supposed to navigate that? You know, it's really tough. What are they gonna do? Sometimes it just, we sit on our hands and we wait for things to come into play here. It looks like we're starting to get some upticks. Hey, Genzi. Yeah, the NQ between the 50 and the 200, and I mean, earlier this week, I think it was yesterday, we were heading right for that 200 moving average, which I was keeping a close eye on that. Yeah, it also tells us we have a choppier environment, but we also held the 70.7. So I'm still on the bullish side of this, looking for price to return back up to the the 50 or at least the 20 to the 50 simple moving average to get things back up. Just wish they would get out of this whipsaw back and forth. We know we're at the right levels, but the risk on these entries right now and the whip back and forth is just knocking a lot of people out of the game because the risk is pretty big, even with one micro. Whip, whip, whip. And that's another reason we look to the tick charts and compare the tick charts to the time-based charts. Because most traders are on the time-based. The tick base can give us a little more detail of what's going on in there. Now, a tick is just based on a number of ticks. I got 3,000 transactions per bar on this. Okay, 3,000 transactions per bar. And on the S&P, I got 5,000. Now you can adjust that up or down to whatever your trading style is and what you like. And this is what kind of produces, with these market conditions, the a little better picture so we can understand what's happening in here. Rather than just one 5-minute bar going back and forth, we're seeing that there's a number of transactions going on in there. Takes the time element out. And then you compare, you can see that a lot of traders that are using time-based are just waiting for something to happen. The tick-based traders are seeing behind the scenes and they're seeing what is happening inside of that time. Looks like the Russell and the Dow are pushing. Well, Russell's looking to push as a breakout. Watch the time of day, 10 o'clock. The whipsaw is not over until we start taking out or breaking above some resistance areas, and Russell is right there. Make sure you have a good stop loss in place. Do not risk more than what your trade plan is. And I don't know everybody's trade plan. Okay, so whatever your dollar risk is, that's your dollar risk. So many times in this industry, people, well, I got in, I lost all my money. I say, well, what was your stop loss? Well, I don't have one. So that you have to be mindful of that. Yeah, just back and forth. We know this has potential of being a good day, but we just got to get this morning shuffle done. Let's check the headlines out there. Well, let's see, dollar's stable, but the 10 and the 2-year yield are dropping. Twin VIX. Then we need some help from the stocks. The stocks are just not. In the scenes. Well, we're not selling off. Actually, the NASDAQ is showing more upticks than downticks. And the NYSE is also showing more upticks. So they're buying this up. We just don't have an entry yet that satisfies. And I'm looking for a fair value gap or, yeah, mainly a fair value gap to get into this trade. And that's, if we're using a 5-minute chart, it's going to take some time for that to happen. Tick Q, right, showing more upticks. 70.7, it's a slow turn, but boy, once it starts going, it's kind of relentless. So we know we're in the right spot. Just finding that low risk entry is going to be important. Maybe. Yeah, we still need help from Apple. Apple's holding things in place at the moment. Whoa, look at Russell rocking. Who came out and started talking? White House Trade Advisor. I have not taken a lot of trades, but just not able to get in and sit through some of those. Come on, NQ. It looks like the QQQs are starting to make a turn. Come on, NQ, follow the Russell. Follow the Russell. Yeah, we have all of our stocks. We still need help from Apple. Nothing really committing to a turn yet. And if you were beat up a couple of times this morning in Whipsaw, it's hard to stay in the trade. It's hard to stay in the trade once it starts going your direction. You know, I'm kind of feeling the same thing right now. What we need to see is the stocks to start moving and see that the cues continue to make a nice move up. Stocks move first, cues move second, then the futures adjust. We'll be just monitoring the stocks. Here comes Apple. No big green candles yet. There goes Apple. Let's see if everybody else starts to get on board. Wondering why Meta wasn't moving. Meta's moving up for credit. Sure is messy over there. Very, very messy. All right, let's take a little look around here. I did notice that Bitcoin's been getting moved also. Bitcoin also has that same pattern, that structure. I entered this one last night off of the zone and looking for the distribution. And again, looking for price to trade above the accumulation area. Very good maps. And if you want to learn more about that, we do cover these in community room and in our live trading. We keep a lot on that. So what was rumored or what was actually facts is that during this whole down move, the White House was buying for the strategic reserve. Imagine that. Okay. Buying up a lot of that Bitcoin. The people out there talking are saying, you know, how it's dead, it's no good, and they're just trying to manipulate that price again. All right, S&P and NASDAQ coming around the far outside, but really difficult to trade on a time-based chart. not much easier on the tick chart right now either. The little wide. But we are pushing that resistance area, and it's just a matter of time before we take out those sellers. Remember, sellers are pushing price down at resistance, and then you kind of look at the area that it's creating. These are often associated with reversal patterns, head and shoulders, uh, higher lows. You know, as they're building these accumulation areas, sellers are pushing price down at resistance. Buyers are coming in under resistance, and this is the battleground where we're at. Now, the more times that price hits that resistance or those sellers, we're looking for them to be used up. Okay. Looks like the Russell's making its way back down. We have a lake base, then we do have a buy territory, which we refer to as a buy territory. Kind of giving a little visual with the colors. To see where the buyers are. When we make a higher low, often the leg base group of candles is a great place to anticipate that turning point. So we might anticipate price coming down and then moving back up. Okay, that's a very common picture. Okay, but the most common part is the leg base. When we make a higher low, the entry is generally momentum and continues to push back higher. And what we're looking for is price to move away from this range at greater than 2 to 1. Now, we don't have the breakout on the NASDAQ or the S&P, and nor the Dow. Okay. So we're still building that accumulation area. Even though a leg base may have been created, until price breaks resistance, we're not out of that buy territory. No, we haven't finished the buy territory. Whoa, crazy whipsaw. Let's just drop this down to a 5-minute so we can look inside, see if anything is setting up for us. One of the best things about this AMD concept is when you recognize where you are, where price is at, and you are trying to make a trade. In a sideways market, it is often very difficult to get a trend established. You make some short-term trades, you might be, you're in and out, you're kind of scalping, okay? And that's what we're seeing here. Now, we still have about 2 hours before the London market closes, okay? So we can anticipate that later in the session, maybe around 11 a.m. when banks and institutions complete their order flow, and they keep that order flow, they keep the price range pretty tight when they want to buy or when they want to sell. And right now you can see that there's a big battle going on here. The AMD concept, and you can look it up. There's a lot of nice little videos out there, but I would also encourage you to go and research some stuff on Richard Wyckoff, okay, and the Wyckoff method and approach. Very important, because the market structure that we're looking at, there's a sequence of events that happen with the banks and institutions. What we get lost in is when we don't recognize the accumulation area, the manipulation, or the distribution. And we're kind of going by, there's a resistance, there's a support, there's a cup and handle, there's there's all sorts of stuff that are inside of these that a trader could use, okay? But if you don't know which part of the sequence you're in, this can be very challenging, okay? So utilizing the map, the approach, I mean, I'm still bullish on the market today. I'm expecting things to go up, but I just can't participate because of the whipsaw price action right now. It's just taking stops out left and right until we start to establish a trend. Even on the tick charts, we're still waiting for a strong opportunity. It looks like Russell may have come to a fair value gap. Let's see. But one thing I want to impress upon you is that when you know where you are on the map, your risk parameters change. You're more willing to wait. You're more willing to sit through a little squeeze. Okay. You pay more attention. Okay. Now, even though we have a bias to the upside, we think the markets are going to go up. I think the markets are going to go up. I think they're going to go up strong. I look for additional evidence. Okay. Many people are great at calling the market to the upside or to the downside. And, they're right a lot of times. Where they fail is they don't have a proper execution, a trade execution for those market conditions and properly sizing the position. Okay. Now, if you were trading one micro, maybe that wouldn't have hurt as much in this environment. Okay. Well, when we're looking at the map, what do we consider? Okay. Well, when we're down in this area, after prices broke out of accumulation, we're looking for a reversal pattern, a leg base entry. We're also waiting for price to rally up and then create a fair value gap. And then we have the move we're looking for, okay? Or to the downside. As price is broken out, and that's where we've come back out to our larger time frames, we see that a couple of our charts, price came to our prep screen zone, a large time frame zone, okay, that meets all of our criteria. The small time frame price had shown the accumulation and shown the drop, okay, utilizing a leg base group of candles, okay. You have to have that approach, and once you know where you are at, then you can utilize your trade entries. You need to have what you call an entry, okay, whether it's a leg base group of candles. We touched that zone, price rallied right out of it. There are buyers, okay, okay. But that still didn't give me a good solid entry. I had to sit through some heat, okay. Mainly I sat through it only because my computer was freezing up, okay. So don't misinterpret that, okay. It was challenging, okay. Um, but anyways, what we're waiting for now on a 5-minute chart is I'm waiting for a group of 3 candles as the market starts to make a potential trend, and I'm looking at profit target back up around 7,000, okay, above 7,000, okay. I need a way to get into this trade. So as we start to see momentum and trend, we already missed the leg base zone entry. Is in a trending environment, we need to wait for the leg base. So if I'm trading off a 5-minute chart, I'm still 20 minutes away from having a setup. That's why I put the time remaining in the bar there. Okay. Yeah, it may be frustrating watching that move for 20 minutes before you have a solid entry. And sometimes you're waiting 15 and then price whipsaws back down. But you're seeing that it will keep you out of bad trades and keep you in good ones. Okay. Once you get that trend established. Now, the techniques, the concepts, they work on time-based charts and they work on tick-based charts. Depending how motivated you are, how aggressive you are, look at that nice little trade there on Russell. Depending on how motivated you are, and aggressive in trading, you will find that you can adjust the time frame to where you're comfortable. Okay. Now I'm sticking to the 5 minute chart because there's a lot of traders out there that when the 5 minute chart starts showing the right strength, okay, that the trends last fairly long time. Okay. But the tradable entry now is becoming, we're waiting for the fair value gap trade entry. So in about an hour, we'll start our mastering the charts recap and review. We do have some pretty decent trades we took over the week in our other live trading rooms and other things. Oh, looks like I've got the tick chart. And just waiting for those candles to close. But having that, the map and the things that we've been covering today greatly enhances your ability to wait for the proper trade setup. Okay. Stay out of a lot of the chop. Looks like we're approaching that right at the bottom of the hour. If ever banks and institutions complete their order flow between 8 a.m. to 11 a.m. Eastern, still waiting for a fair value gap. Nice entry off of that in queue. Also waiting for that. 70.7. There's a lot of upside left in that. And we see the stocks are now starting to participate. We're all waiting for the stocks, waiting for the queue. Okay. Now, the stocks themselves, even on a 5 minute chart, in order to establish an uptrend, need to make a higher low and followed by a higher high. Right now, we've just made the first low. We're not in the uptrend yet. Okay. Once they make a higher low followed by a higher high, that does imply that we should have a pullback before the trend starts. So tough to sit through some of this. You guys find the additional teaching helpful as we go through this? I can just be quiet and just watch the price chart but understanding the details, I think, is very important to all traders. So for the tick chart on the NQ, I'm waiting for an entry now back to the 974. Thank you, ladies. Now we're starting to get underway. What do we got on the time-based charts? Let's open these up. And start planning for where we have an entry. In the Mastering the Charts recap and review, I'll start that in about an hour. For those who don't know, the Mastering the Charts recap and review session, we do continue our trading that we're doing right now. We review our live trading rooms for the last week, and we greatly cover what we use in a pre-market routine. Okay. We kind of go back over, our team takes a lot of notes on what we're talking about, what the market conditions are. How did our pre-market routine provide us the information we needed in order to participate? Okay. And that's where we produce that each live trading room to show you what we anticipate as far as the day. Let me reiterate a couple of things on here. For the last two sessions, index has been in manipulation phase. Any reversal pattern may be the start of distribution. Move back up. CPI may provide that liquidity. What we notice is the indexes have realigned and the overnight trading have very similar low time frame price patterns, an early indication of a correction. Look for demand and supply levels about 0.5% to 1% from prior session's close. Okay. Keep in mind the Dow 30 stocks trading on light pre-market volume, we're going to have a lot of whipsaw. In the pre-market routine course that's coming up, you will also find that when we talk about measuring the Globex range compared to the daily ATR, if we're about the midpoint, we are also going to experience some choppy market conditions. Okay, and we certainly did that today. Understanding those conditions will allow you to stay with the trade or get yourself out. Okay. Looks like we're coming up to that first fair value gap. Nice move on the NQ, but what a rough ride. Okay. Now we do need a pullback on the stocks just a little bit to make a higher low to get that trend continuing. Okay. So this is where it becomes important. We now have the third candle is about ready to complete in 1 minute. And what we will look for is price to retest the proximal line of that fair value gap. Remember, a lot of traders were pretty rough ride this morning, back and forth. Okay. So our next tradable entry using a fair value gap in these market conditions will be an entry around 24,849. And then we have some headwinds on each one of the fair value gaps on the upside. Remember what we talked about as far as the map. We had the accumulation area. We had the manipulation. We are now starting to build on the distribution. Okay. The map is important, but also your entry and trade risk parameters are very important and how you make it through some of this trade environment. All right. What do you guys think? A lot of stuff going on today. A lot of good information. Wish I would have known a lot of this when I first started. But that comes to the end of our session today in our live stream. And I'll see you guys in about an hour. And just after that, I'll be heading over to the our Discord room where we'll hang out and trade the rest of the day. I do expect a pretty steady climb back to the upside on the equity indexes. Okay, we just got to find a way to get into it now. Everybody have a wonderful trading day. And we'll see you next Friday if you're just using or just coming in for the live stream. And for other traders, I'll see you in the Discord room on Monday. Banks are closed, so the futures may still be open. And we'll be in the Discord room at that point. Okay? Trade safe, trade smart. Have a great day. Bye now.